A disappointing day on the market, but the market ending down 0.5%, 0.5% on some pretty light volume, so that's a relatively good sign that we didn't see some big volumes in terms of this selling. But it was all about the material space today. The material sector did the most amount of damage, and that was on the slide that we saw in commodity prices overnight. Copper, gold, oil prices, even iron ore, all managed to slide of between 0.3 to 0.5%. So that material space really damaging the market. On the other hand, the biggest sector on the market, the financial sector, not looking too bad at all. It was one of the only sectors in the black today. Yesterday we saw some large volumes going through the big four banks, and it was good to see some follow through today. So it does look like with the recent slide that we've seen in the banks, investors have taken it as an opportunity to buy on the dips, and we've seen that buying continue through. So that's a positive for the financials, but all in all a pretty quiet day, but a big day in terms of moves. The materials sector absolutely smashed and the banks doing well.
John mentions plenty for investors to get their head around. Does it act as a bit of a catalyst one way or the other for our market? A little bit more activity, a bit more volume?
Well, it's also a new month, so hopefully December, with some of those big dividend checks being paid out for the big four banks between the 16th and the 18th of December, we will see some of that money flowing back to the market. But this week's been quiet, with the exception of yesterday and Thanksgiving in the US, with that half-day holiday also on Friday, I guess really putting a bit of a spanner in the works in terms of what's happening on the markets. We will be watching those Thanksgiving sales though. They're usually quite big in the US, so just watching to see how those sales go down compared to previous years, especially given that overnight we saw those consumer confidence numbers, and we actually saw quite a big drop-off in the month of November. So that's concerning as a forward indicator for things like retail sales. So we will be watching that retailing period in the US, and Thanksgiving is always a big period in the US in terms of the shops, and some of those shops certainly not closing down over that Thanksgiving holiday and actually opening up. So just watching to see whether that's going to lead to an increase in volumes over there.
Focus throughout the year. It's been an absolute roller coaster ride. Indeed, yesterday we saw some of the top performers being the gold stocks. They're at the other end of the scale today, smashed.
A horrific performance today, James. I mean, we saw Newcrest Mining, the lowest level that we've seen in more than a decade.
Goodness.
In fact, just having a look at the chart for Newcrest, this is what the 10-year chart looks like, and you can see that under $9, we really haven't seen that since 2003, with Newcrest being the largest gold stock in the gold index. If we have a look at a 20-year chart for the gold index, this is what it looks like. Not surprising that once again we haven't seen these type of levels in more than a decade. Of course, if we have a look at the gold miners, some of the most highly leveraged were the biggest movers today. We saw Silver Lake down by 14%, Resolute down by 12% in one session, and Kingsgate down by 9%. Now, if we have a look at gold, it's been a roller coaster ride throughout the global financial crisis. In fact, having a look at gold prices, and this is gold prices in New York, and this is a 5-year chart, you can see that we saw gold reaching an all-time record high back in 2011, and that was at a time when money supply was rapidly increasing. We saw gold supply relatively stable to that, and we also saw gold as a safe haven status really seeing quite a bit of demand. At the moment, we're seeing a very different scenario where we're watching the money supply, and we're probably going to see that growth in money supply moderating, especially in terms of the US, and of course its status as a safe haven not really needed when we're seeing growth in the US economy. So back in 2011, it wasn't unusual to see targets for gold above the $2,000 mark. Unfortunately, most forecasts on gold at this point in time are bearish because of expectations around US tapering, and that hasn't been good news for those gold miners.
Julia, where does it leave the gold stocks then, when a lot of people use the simple, I suppose, equation of where is the gold price versus the cost of getting the gold out of the ground? I mean, if that's narrowing, continuing to narrow, that's not good news.
It isn't good news for those high-cost producers. I think when you have a look at some of those low-cost producers in the market, there has been moves. For example, Alacer Gold, it had some very big high-cost assets over here in Australia, but it's managed to sell those off, and now its Kopla mine over in Turkey is very much a low-cost producing asset. So it's still profitable at these lower gold prices, and even if gold falls below 1,000 US an ounce, it will still be profitable. But it's no longer a growth story in the market, and that means that investor demand has really dried up in this space. So really prices are forward looking, and if we look forward, unfortunately the scenario for gold is looking quite bearish at the moment. You still see the traditional demand of jewelry coming through, but the investment demand has really flowed the other way.